right stock at the right time.
Good morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. I'm Neerja Shah and you're watching IndianOpen. Let's go straight to the headlines. Donald Trump trespasses on the Fed's independence. The US president says he's not thrilled by the rate hikes. US stocks closed lower while the dollar declined temporarily. A slump in the yuan deepens after the Chinese central bank weakens its daily reference rate by the most in 2 years. The Lok Sabha will debate the no-confidence motion against the Narendra Modi government today. It is the first such vote in 15 years. Bajaj Auto and Wipro are two nifty companies that will report their numbers today. Well, let's take a look at the trade setup for the morning. Remember, yesterday the market sentiment got impacted ahead of the no-confidence motion today. In fact, it probably happened day before yesterday as well. But we started off fairly positively yesterday, only to give up some of the gains in trade. There were slight misses that we saw on the large caps. But more importantly, what we're seeing becoming a pattern of sorts is that any kind of miss, even the slightest miss, either on news or on results, gets impacted very significantly. And we've seen that happening across a clutch of stocks. It happened in Kotak Bank in trade yesterday. But if you just look at the last 10-15 days, a bunch of names, the Ashok Leylands, the PVRs, the Inoxes, the Mindtrees of the world, a smallest of miss that comes in onto those names, and the corrections are swift and the corrections continue. This is what happened in trade yesterday, but over a 15-day period or over a 1-month period, you will see the kind of corrections that have come into each of these names is fairly strong, which clearly shows the bipolar nature of this market. There are stocks which are trading at 52-week lows or life lows, as the case may be, and there are enough names which are trading at such levels on the valuation front that they get punished at the smallest sign of disappointment. No big changes that I thought happened by and large on the FNO positioning. It was the Bank Nifty weekly expiry, so anyways, discount a bit of activity that happened on the options front. We'll probably get a fairer picture at the close of trade today. The currency has been weakening though, and that's the issue. Rupee ended at about 69.05, which is on an ending basis trading very close to or at the all-time lows. So that continues to remain a worry. Well, for a lot of people, this would have been a matter of when, not if. And we've started showing that. Let's see what the start is looking like in today's session. What to watch out for in today's trade. One, of course, the no-confidence motion, and we'll talk about it in great detail on first word, so I won't dwell too much upon it. But key results and a clutch of mid-caps and small caps which are important. Not so much for a Bajaj Auto or a Wipro, but look at the broader end of the spectrum. Bata India, Seat, Havells, HDFC Standard Life would be an interesting one to watch out for. And the Citigroup research team was talking about how there could be a big reaction in L&T Finance because the market is going ahead into the numbers with some bit of caution or some bit of cautious optimism. If L&T Finance manages to surprise on the upside, which they believe it could, and they thought that L&T Finance could well be a stock that could surprise positively in trade. So from a trade perspective, L&T Finance becomes fairly important as well. Watch out for Seat, very, very volatile stock, trading close to lows very, very recently. So should be an interesting one to watch out for as well. Last but not the least, the metals on LME have just come off a little bit, so do watch out for the commodity names. Save for Hindalco, all of them were up and about in trade yesterday. Let's see if they succumb to some bit of selling in today's session. However, that's during the day. What to watch out for at 9:15, the 3 or 4 key stocks that I thought we should highlight in the session. So fairly decent numbers by 2 or 3 names. Bajaj Finance, par for the course. You can argue that there may have been a miss here and there, but I thought numbers by and large looked okay. ABB India numbers looked okay. But a cement name coming out with, well, reasonably good set of numbers on a slow base, a small base of course, but Sri Digvijay Cement, not saying this will really set the stage on fire, but do watch out. Revenues up 23%, net profit up 4 times rather, at 6 crores. Margins expanded a bit as well. A bit of a contrast to what was expected from the cement pack. Let's wait and watch what Sri Digvijay Cement does in trade. Milk prices to farmers in the state of Maharashtra have been raised to 25 rupees a litre. Watch out for Prabhat, watch out for Parag. Again, I think the managements have cited that a lot of low cost and low quality milk producers or milk companies might get impacted, not so much for a Prabhat or a Parag because the average selling price of the milk that they sell is anyways high, and therefore they don't get impacted too much. But you never know. There could be a sentimental impact, if not an actual one, on the likes of Prabhat and Parag, both of which have a presence in the state of Maharashtra. So do watch out for these two names particularly. Hatsun Agro is more in the southern region, so don't quite know the impact thereof, though Hatsun has its results that have come out, so might well have a reaction to that. And last but not the least, on a day which could well remain sideways to marginally lower, there's an interesting brokerage note that has come in on Marico. Bank of Africa Merrill Lynch has come out with a note. They've maintained a buy, but they've raised the target price to 420 from 390. They're seeing continuous decline in copra prices, and they believe there is some growth revival that is seen ahead, all of which could point to some bit of activity in Marico. Remember, Yatin was speaking about the fall in copra prices and the resultant uptick in Marico prices since February. BofA has taken note of that and believes that the continuous decline would well lead to some more upsides for Marico. So let's wait and watch if this one reacts in the session today. However, what's on first word today? It's an important day of trade, and we start off with the most important story on the minds of almost everybody, not just investors. The NDA government may have the numbers, but the trust vote will provide insights into who stands where. Neerja Chowdhury will get us a heads up on what to watch out for. Arvind Subramanian pitches using RBI's reserves to recapitalize banks as he exits as the chief economic advisor. We give you a small slice of that conversation. And then we discuss the possible synergies for Hindalco and Novelis if they were to acquire Aleris. Bloomberg's George Smith Alexander Johnson to talk about the story that he broke way back in January, and Darshan Johnson with an analysis on what Aleris would mean for Hindalco and Novelis. However, the most important story for the day today, it's D-Day for the Narendra Modi-led BJP government as it faces a vote of no confidence in the parliament today. Well, here's all that you need to know. So that's all that you needed to know about the no confidence motion and what it means. But joining us on the show to talk about the implications of such a move is political commentator and columnist Neerja Chowdhury. Neerja, good morning and many thanks for joining us on Bloomberg Quint. How are you looking at this? It was first being seen as a tactical move by the opposition. And post that, in the last 2 or 3 days, it's also being seen as the opposition having played into the BJP's hands. How are you viewing what the outcome of this one could be, keeping in mind the numbers at either side?
I think, number one, a no confidence motion is a weapon in the hands of the opposition to hold the government accountable. And if they feel the government's not delivering, to bring it down. Now, this is a card that the Telugu Desam has played even in the budget session of Parliament and also in this session. And they had declared their intention that they would do so. Now, they have their own compulsions, political compulsions in mind, which is to regain lost ground in terms of winning over the votes of the minorities by taking an anti-BJP stand, and also playing on Telugu pride by talking about the special category status for Andhra Pradesh. Now, the others, since the TDP took that line, the others in the opposition had to join in. And as the Congress has been saying, Congress leaders have been saying that this will be an opportunity for us to reach the far corners of the country, because they feel, and this is a grievance they had, that the media does not take their voice to the country in the way it should. And the media is much more pro-government. Now, they also hope that it will help the opposition come together as a phalanx to take on the Modi government in preparation for the 2019 big battle. And I think some of the leaders have said this, that today will be the launch of the campaign for 2019, both for the opposition as well as for Mr. Narendra Modi. They are going to use this as an opportunity. And I think one thing we need to be absolutely clear on, we have already entered election mode. And every event, whether it's in Parliament, outside, will be used and viewed by both sides on furthering their agenda.
Yeah, which I completely agree with. Now, Neerja, for the uninitiated, what are the numbers that will become important? Because everybody's talking about what is it that the NDA or the BJP will look to strike in terms of numbers in order to have the political one-upmanship. Would the target be to get 2/3 of the majority on the votes? And considering that there are a few parties which might abstain from voting as well, maybe AIADMK, maybe Biju Janata Dal, if they abstain from voting, would the BJP hope to get 2/3 of the majority on the numbers?
I think the number one I want to clarify, as you were saying, for the uninitiated, there is a difference between a walkout and absenting yourself from the vote and abstaining. Absent means you are not there, therefore the halfway mark comes down, which makes it easier for the BJP to cross that halfway mark. Abstaining means you're sitting in the house and you're saying neither yes nor no, but I abstain, I'm not voting for the either. But your numbers get counted in the total number in the house, therefore the halfway mark is higher. Now, the BJP has a majority. The NDA as of now has 312. The BJP has 272. The halfway mark, given the vacancies and the recent resignations, is 263. Now, the BJP has numbers comfortably, unless all its allies decided to desert it, which is very unlikely, because the BJP, between the budget session of Parliament, when it did not allow the no confidence motion to be taken up, citing reasons of lack of decorum, it has worked on its allies. It's reached out to the Shiv Sena, it's reached out to Janata Dal U. Of course, the TDP and the PDP have left the NDA, but Akalis are with it. So I think, as far as their allies are concerned, and Shiv Sena, I think in all likelihood, may criticize the government on the floor of the House, but will vote for it. Janata Dal U will vote for it. Akali Dal will vote, and so will, you know, several other smaller parties. So the numbers are not the problem. What the BJP is doing is to make a virtue out of necessity and showing, you are saying we don't have the numbers, we tell you we have more than what we had. It is an extended NDA we are wanting to project. And that may happen if regional parties, the so-called neutral parties like the Biju Janata Dal, the TRS of Telangana, YSR Reddy's party, Anna DMK. Now it'll be interesting to see what they do. Do some of them support the government? In which case what you're talking about, a 2/3 majority may be possible, or will they walk out, in which case the 263 line may get even further reduced, and therefore the difference between the opposition side and the government side may be larger. Or do they abstain, sitting in the house, say I vote for neither this side or that side? Much will depend on that, but essentially there's no threat to government. The government has managed its numbers. The opposition hope that it will also be able to show the cracks in the government side. You know, the dissenters within the BJP may show their hand today, may either absent themselves or vote against. That is not happening. Shatrughan Sinha has said he's going to be with the party, so that doesn't seem to be a threat. Right. The BJP has got its numbers right, and I think BJP's political management is quite fantastic. I mean, we have to give it to them. Therefore, the opposition, by fielding, Rahul Gandhi will lead the charge. That will be very interesting. So opposition will try and put the Modi government in the dock on issues of farmers' distress, unemployment, women's safety, Dalit anger, minorities insecurity, those kind of issues, and reach the country. I think it's really going to be a bugle for the 2019 elections today.
Yeah, true that. And I think that's what makes it so fascinating. The numbers, the difference between abstaining and being absent, and what does all of that do as well. One quick comment, Neerja Chowdhury, before we wrap up this discussion. From a Congress perspective, what would this mean? Because they've already changed their narrative from Sonia Gandhi earlier saying, who says we don't have the numbers, to saying that it's not about numbers. So they've now kind of going ahead into this with that pitch. What is a victory for the Congress at the end of this? What would be a victory for the Congress at the end of this all?
I think it depends how they use the occasion and the skill with which they have marshaled their forces, their arguments, the skill with which they put the government on the mat. Because you see, Narendra Modi will probably speak at the end for an hour, it's being said. He is a very effective communicator. Rahul Gandhi will lead the charge, as I said, from the Congress side. And Mr. Mallikarjun Kharge, Jyotiraditya Scindia are built to speak. And there'll be other solid voices from the opposition. So it's going to be a very fascinating discussion. And I'm very glad, that the no confidence motion has been accepted, because we are back to debating things. Din and noise had become the lexicon and the language of parliament, and that is not very healthy for parliamentary democracy. But for the Congress, much will depend in how it reaches out to the rest of India, with the entire opposition or a good chunk of the opposition standing with it. So that itself will be a signal to the country.
All of this makes it very, very interesting. Neerja Chowdhury, thank you so much for joining us this early in the morning and putting all of that into perspective. Really good to get your comments. Well, keep in mind, for the opposition, they're now going into this no confidence motion with a lot less time to speak. BJP, as per the latest, has probably over 3.5 hours of speak time versus some of the others. Obviously, the collection of opposition parties also not having that much. So going into this with less time to highlight the failures of the government, and already making the pitch about this not being about numbers. So if the Congress manages or the opposition manages to come out trumps, due credit to them at the end of this all. Let's wait and watch. It promises to be a fascinating day for every political watcher, maybe even for market watchers. So, yep, all the updates right here on Bloomberg Quint Live. Before we get into markets, one more very important macro voice. Outgoing Chief Economic Advisor Arvind Subramanian suggests using the RBI's capital to recapitalize banks. Speaking to Ira Duggal, he said it makes more sense than ever before. Just listen in.
there are, I think, two kinds of, or at least two kinds of banks, right? Those that are perhaps not so viable in the long run, and those that are fundamentally viable. And I think we do have a PCA framework to address the first category, essentially that progressively you want to slowly but progressively shrink the balance sheet of these banks in the PCA. Then you talk about the other banks, what needs to be done. But you see, remember that when you talk about recapitalization being delayed, it seems to me that recapitalization cannot proceed without the resolution and the reform. After all, if you pour in money into banks and you don't see things improving going forward, that's kind of money down a black hole, right? And so I think that to say that it's been delayed, I would put it more as, did we do everything, all the necessary complementary actions quick enough or not? I think that's the question, not whether one component was delayed, because I don't think you could have put in money 2 years ago if you didn't have the recognition, if you didn't have a resolution framework, if you didn't have a reform framework. So I think all of these have to go together. But I mean, I think the question is a legitimate one, whether the system as a whole perhaps took longer than it should have to address the twin balance sheet challenge. But that's something that we need to reflect upon going forward, try and understand the lessons and be honest in our assessment, both the government and the RBI.
Sir, I take your point, but I think, at this point in time, the capital is required to be able to proceed with the resolution. We are dependent on the IBC, yes, but banks need the capital to be able to make the requisite provisions, etc. So there was an idea that you had pushed in 2 consecutive economic surveys, which was to dip into the RBI's reserves or change the nature of the RBI's reserves and get capital out of there to recapitalize the banking sector. Do you stand by that idea, sir?
Oh, even more so now, even more so than I did earlier, especially when you see, how bold and courageous, central banks have been in the post-global financial crisis era. I think that's certainly something that I stand by, and I still think that's a very viable, plausible ingredient for the overall reform of the twin balance sheet challenge. I think that has to be one important component of it. In fact, if you read the latest thinking on central banking theory, I think there's some really, really radical ideas out there, and using bank capital to recapitalize the banks almost seems boringly conservative by today's, daring being exhibited in central banking.
What are you proposing, sir, exactly? If you can sort of highlight that idea for us.
No, I think it was there, as you said, in both the surveys, that I think that, you have to have a realistic assessment of how much capital RBI requires. And in our assessment was that it's overcapitalized, and then if it is the case, what should we be done with it? And conceptually, you should just think of it as, instead of the government having this extra capital in the RBI, maybe it's capital that's better deployed, as you said, to recapitalize the bank. So it's simple. It's conceptually not a complicated thing at all. Government has capital in RBI. It's perhaps too much. Let's use that instead to recapitalize the banks, but along with the other measures that are required to address the twin balance sheet challenge, the resolution, the reform, and so on.
So you think, just a last question on this, but you think it can be done in a manner which is not, sort of doesn't send out the wrong message? Because I think in this, there are two arguments, the one that you put forth and the ones that Dr. Rajan has put forth. I'm sure you've had deep discussions with him on it. Whichever direction one goes in, it has to be a very deftly managed maneuver.
Both in public and in...
Go ahead, sir.
Yeah, so I think that's a very good point. I think, yeah, Raghu and I have had these discussions both in public and private, and I think we've, cast aspersions on each other's knowledge of monetary economics, which has been fun. But I do think that, I 100% agree with you that, I mean, these are not things that should be done lightly. These are not things that should be seen as, one party foisting it on the other. These are things that have to be done completely cooperatively, and in fact, it should be done by conviction on both sides.
The whole conversation will be up on the Bloomberg website as well, so you can tune in for this very interesting chat. However, back to markets and talk about arguably one of the most important stocks of trade yesterday. Hindalco dropped 7% in trade after CNBC reported that the Aleris acquisition might be in the last lap. Remember, Bloomberg reported on a $2.5 billion deal way back in January. So George Smith-Alexander of Bloomberg News, who broke that story, Johnson right now, and Darshan then Johnson to talk about the analysis as well. So both of you, thanks for joining in. George, let me start off with you. Way back in January, you first cited that Hindalco might be keen to do this. Is there any way of believing that Hindalco might be closer than ever before to this? Because in the exchange filing, they have said that they are scouting and nothing is out of the equation.
So if you look at it for the last 1.5 years, they have been looking at this asset. They have been actually looking at both Constellium and Aleris. Constellium, they dropped out, and Aleris was the asset which they have been looking a bit more seriously from the starting of the year, where they put in a non-binding bid. So post that, things have been a bit hot and cold on the asset. There have been due diligences in and out of the thing, because there have been other bidders too for the race. There was a Chinese bidder earlier for $2.3 billion who then dropped out of it, if you remember. So it looks like it. I mean, those stocks may have gathered steam now, but on the other hand, if you look at Hindalco per se, Hindalco is it's having quite a strong balance sheet at this point. The net debt of the debt of the company has fallen down by around 17,000 to 18,000 crores in the past 3 years. You're sitting on around $2 billion of cash, nearly $2 billion of cash. So cash is not much of an issue, and Novelis has also performed a lot more better than what one would have thought of. So, I mean, all put together, it's a deal which Hindalco can do it quite easily without without creating much of a issue, and it's an asset where people are ready to give loans to. So that's also not much of an issue on the other side too.
Interesting. Stay on, George. Let's get in Darshan as well, and let's take a look at the Aleris business portfolio and why the acquisition might make sense for Hindalco. George, feel free to come in, but Darshan, your analysis, what does it suggest?
Yeah, so basically, if you're looking at it, we're trying to put together a scenario analysis, because we want to inform the public that, even if the deal goes through or does not go through, you should know what this deal exactly is and what the possible synergies is. Now, basically, if you're looking at what Aleris is, it makes rolled aluminum sheet products, and basically, they have significant amount of presence in the North American market. They have plants in North America, Europe, as well as China. So this is what Aleris does. Now, basically, as far as the presence is concerned, Aleris has a 51% revenue comes in as far as the American market is concerned. The same for Novelis is close to 35%. Europe also both have equal. Aleris has a 46% of their revenues comes in from Europe, while 30% of the revenue for Novelis comes in from Europe. Aleris has no presence in the South American market, but Novelis does. And as far as Asia is concerned, again, 3% comes in from China for Aleris, while 18% comes in from Novelis. So if you see, if the merger does happen, if they take it over, it will be a good geographical mix, and Hindalco and Novelis gets much more presence in the North American market. Now, this is what Aleris has. Aleris, maximum of their revenues comes in from the North American construction business. The two components where they have spent a lot of capex and they are developing is the aerospace and the automotive space. Now, Novelis wants to tap, and they've in the conference call always said that they want to tap in significant amount of money in the automotive space. Now, if we take a look at what's happened with this is the breakup of the revenue composition of Aleris. Now, if you see what happens, and if you take Novelis into consideration, you will come to know that they don't have a very sizable chunk currently in the auto space. So currently 18% of their revenue comes in from the auto space, where demand is growing in the US. So they want to grow there, and they have sizable chunk of money revenues coming in from the beverage can. So they want to increase their presence in North America, and they want to increase their presence in the car automotive segment. So this is where LRS fits in perfectly as far as her strategic fit is concerned. Now the other part is that LRS commissioned a 425 million plants in Kentucky. Now if Hindalco would have gone in for a greenfield acquisition, analysts say that they could have actually spent anywhere between 3 to 5 years. So if they're acquiring LRS, they would save almost 3 years in this greenfield project, which they can immediately commission when they are so positive on the auto body sheet projects. The other part that we need to look out is why LRS, couple of factors why analysts have said what exactly is it. The investments over the past few years that LRS has done has close to $1 billion in terms of acquisition, in terms of capex, and they will start their payback now. So capex won't be required for Hindalco to grow now. Secondly is that, you know, they are not too dependent on the aluminium prices volatility, because they work on a sales plus fee basis. So the project, they pass it on. So that's where again it's hedged against that. And aerospace and auto are very high margin products. Auto, Novelis has said that they want to grow. Not much sure on the aerospace business, but they get it anyway. As some of the analysts believe that they could pretty much sell off that, but you know, there it's a very high margin project if Novelis wants to keep that. So this is these are some of the reasons why LRS becomes a good strategic fit for Hindalco at this point of time.
Interesting. George, you would have scanned through all of this, of course, when you first broke this news piece of news as well. There are possible synergies that come into play now, even more so. What are the two key things that people should watch out for when they're looking at this deal?
So if you look at it, as far as LRS and Novelis is concerned, especially on the auto part component, they wanted to, Novelis wanted to increase the sales of the auto part, the flat products, and they seem to have done quite well. Some of the analysts believe that they have gone ahead than what projections were. So this deal in a way helps you know, the combined operation, you know, pushing forward to the on the auto sector. And as I said, as far as financing is concerned, it's not such a big issue for Hindalco at this point of time. Unlike earlier, it's a deal which can be easily consummated. They do not have to stretch too much. It's a deal which fits into their, you know, fits in very nicely into their scheme of things too, without stretching them out.
Okay, so George believes that could happen. Darshan is also scanned as to what brokerages have to say with regards to the balance sheet strength of the deal. Darshan, what is the brokerage verdict?
Yeah, so basically, George is absolutely right. You know, the balance sheet is strong enough. The EBITDA of LRS also is rather strong enough. Now, what has happened is this is what LRS has guided. Calendar year 17, the EBITDA that they did was $201 million. Obviously, they had a $30 million write-off. Otherwise, it would have been close to $230 million. What they're saying is by calendar year 19, the EBITDA will move into $330 million because all the investments that they did in the auto and aerospace business will pay off. So they believe that there could be sizable up move on the EBITDA front. Now, this is the Macquarie calculation on the post-deal and pre-deal deal. Now, pre-deal EBITDA of currently of LRS is close to almost pre-deal of LRS is almost 13,000 crores for Hindalco, and post-deal it will move on to almost 15,127 crores. The debt of Hindalco will move in from 39,000 crores to 55,000 crore, and the net debt to EBITDA, which is currently 2.8 times, will move into 3.7 times. Now, what is interesting is that this is on an FY18 basis. On an FY20, they believe that the debt EBITDA level will come down to 2.8% because the synergies will start playing out for them, and the EBITDA will be start generating in LRS. So they believe it's positive. Some of the notes that have come out do indicate the fact that IDFC says that it's not attractive from a valuation angle, but the assets that they are acquiring are not bad, and they believe that the debt EBITDA level are comfortable at 3.5 times. So they are saying that valuations on a future basis at this basis are not attractive. The other notes that have come out is JP Morgan. They are saying that the Hindalco's balance sheet can easily take this acquisition. The auto body investment is a key attraction why Novelis wants to go in for the LRS acquisition. And finally, the last note that came out was the Macquarie note. They're saying that valuation at 7 to 1 time on an FY20 basis is on an EV to EBITDA basis is similar to the listed peers, and they will keep the debt equity levels below 3 times on an FY20 basis. So overall, what George said pretty much makes sense, that it's an extremely attractive fit for Novelis in its portfolio. They're looking to grow in the auto space in the American markets, and won't be too much stress on the balance sheet, and the numbers will start playing out for themselves in the next 2 years, according to what the LRS management has guided.
Very interesting. Darshan, thanks for putting that into perspective. George, one final thought. It's difficult to give timelines to this, right? It could well happen in the next 2 months. It could well happen in the next 6 months out, if it happens.
They have been waiting for more than a year on this. So I don't think a few weeks or a few months here and there actually makes too much of a difference for them, unless the market collapses or something of that sort happens.
Okay, great. Well, George, thanks for breaking this story way back in January. You brought it to the minds of the markets that this could well happen. Darshan, thanks for putting the perspective into the numbers as well. That's all that we have on an extended session of First Word today, but lots more lined up on Indian Open. We talk about the markets in the political equation with Tirthankar Patnaik of Mizuho Bank. And will the strong growth momentum for Bajaj Finance continue? Rajeev Jain joins in to talk about that. After this break, though, full tilt towards the day's trade.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Catching up on news feels like a test match. Want the highlights? We hear you.
It's an ocean of news out there. Need a navigator? We hear you. Do you have analysis paralysis? A case of too much information and not enough time? Do you wish someone would just pick the most relevant topics and tell you what you need to know? We hear you.
Good morning. You're watching Bloomberg Quint. This is First Word.
Curated and presented by Bloomberg Quint's senior-most editors. Weekdays at 8 a.m.
Welcome back. You're still watching Indian Open with us on Bloomberg Quint. Let's quickly do a check of what the Asian market indices are doing on this last day of the week. Nikkei is down almost 0.5%. Some bit of positive ticks seen for Shanghai, but it's just about flat. And Hang Seng seeing cuts of nearly 69 points. Remember, the last 2 sessions we've seen some unwinding coming in for our markets, and SGX Nifty this morning is suggesting a flat opening for the Indian markets. But what cues we're getting from the derivatives market? Let's head across to Agam Vakil to find out the same. Hi Agam, good morning.
Good morning, Navneet. Well, we're seeing longs unwind both in the Nifty futures as well as the Nifty banking futures. As you can see here, we've seen about 2.5% decline in OI for Nifty futures. Banking Nifty futures also seeing a decline of around 1.2%. Let's move on to the next variable, and that's where we see open interest change, and we're seeing substantial writing around the 11,000 mark both for calls and puts, and 11,900 put also seeing some amount of writing coming through. When it comes to open interest distribution across, what we've seen is there you have it. That's your maximum open interest still with 10,800 on the put side, and once again max OI has shifted from 11,100 to 11,000 in terms of the call size. The put call ratio of course has largely remained unchanged at around 1.63. In terms of stocks, we're watching out for Adani Enterprises and Adani Power, which are in the F&O ban at this point in time, and among 3 other stocks that I'm watching out for is Ashok Leyland continuing to grind lower, more weakness and some unwinding coming along as well. PVR, on the other hand, is starting to see some short covering coming through even as the stock advances by as much as 2.7%. And finally, let's take a look at Just Dial. We're ahead of its earnings strong, some longs being taken as we move into its earnings. So these are some of the stocks that I'm watching out for as we move into today's day of trade.
Well, Agam, thanks for putting that into perspective. Let's talk about all of these and more with Avinash Gorakshakar. He's head of research at Joindre Capital. Joins us right now in the studios. Avinash, good having you. Thanks so much for joining in. Starting off with 2 or 3 numbers that came out yesterday, or 2 or 3 reactions that happened yesterday and over the last few days. Mindtree, 8-9% fall post the numbers. Yeah. Ashok Leyland, a continuous fall due to the axle norms and otherwise as well. What do you make of these 2 top losers?
I think numbers for Mindtree, especially on the margin front, were more or less in line with expectations. And I think the markets were definitely looking at some sort of profit booking because the stock had actually also outperformed quite significantly. So some amount of profit booking in Mindtree was expected. My sense is, I think within the IT pack, the frontliners like TCS, HCL Tech, or maybe Infosys could possibly do much better than Mindtree, at least in the near term. As far as Ashok Leyland is concerned, Neeraj, I think the markets have actually beaten down the stock much more than what the street expected, and I think largely from what we hear on the ground is that demand for existing vehicles would actually go up because already the existing vehicles used to be overloaded. So our sense is that there could be a temporary bump up in demand for commercial vehicles, and yes, for the new vehicles, I think clearly there could be a little bit of problem for the next 40 to 45 days before customers get used to the increased prices. But overall, the bigger trigger for most of the commercial vehicle players is the scrappage policy. I think the government is working on it. Maybe in the next couple of months, scrappage policy could be in place, and that means there could be a bigger incremental demand for all the CV players. So to that extent, I think anything below 100 or nearby to 100 odd rupees for Ashok Leyland definitely looks attractive from a longer term point of view. In the short term, you could possibly have these confusing news flows as to how the stock would perform.
Okay, so the stock is looking attractive at current levels. That's the advice coming in from Avinash. Remember, it's corrected a lot from those levels of 150 to 160, currently sitting around that mark of 105. But talking about the auto pack, Bajaj Auto is likely to report a strong quarter this time around. However, higher taxes are likely to keep the profits in check. Yash Upadhyay summarizes the street expectations from the two-wheeler major this time around.
So we are expecting a strong quarter when it comes to Bajaj Auto. Their top line is estimated to come in at about 7,800 crores, which is a 41% growth on a year-on-year basis on the back of that strong 38% growth in the volumes. Margins too are seen expanding by nearly 300 basis points on the back of a higher share of three-wheeler sales and the price hikes announced by the company in the quarter gone by. Net profit too is seen reporting a strong 35% growth, coming in at about 1,250 crores. Apart from that, we would also be looking out at the management commentary with respect to the demand outlook for three-wheeler sales in the domestic market, and also how the demand is panning out in the export market, along with the pricing trend in some of the key markets.
So watch out for Bajaj Auto in the session today as well. Well, that notwithstanding, a clutch of numbers that came out yesterday as well. Avinash, just a quick thought on Bajaj Finserv.
My sense is, I think numbers, definitely should be better. In fact, our sense is that, clearly the loan book growth, the asset quality, and the kind of growth numbers which would come in for the next couple of quarters seems to be extremely strong. So I would believe that, these are companies, Neeraj, which actually need to be accumulated from a longer term perspective. I think any correction in this stock should be used as an opportunity to actually build up more positions. Our sense is that you'll see a lot of incremental demand, even at the current odd levels.
Interesting. Okay, lots of other stocks. Since we spoke about Bajaj Finserv, Avinash's view, let's talk about that in greater detail, as also some other numbers and some stocks in news with our research team, which joins us in the research huddle. So key stocks in news, some result reactions, and lots more. Shraddha, Nikki, as well as Saloni join in to talk about that. All three of you, good morning. Shraddha, let's start off with you. The stocks in news, I presume.
Right. So I'm going to skip talking about Hindalco because Darshan has discussed this extensively. That apart, Alembic Pharma has received a clearance for its API facility based in Karakhadi. So you could see some sentimental positive reaction there. It's not a very big facility for Alembic Pharma. You have Financial Express, which has said that NCLT has cleared JK Paper's resolution plan to to revive Sirpur paper mills. ET report says that TPG will team up with Abu Dhabi Investment Authority to back UPL's $4.3 billion Arista buy. The incremental development, they say, is that the Abu Dhabi Investment Authority will now invest $900 million as, according to the earlier planned $1 billion. So some small downtick over there. You will have milk companies which will be in focus. Prabhat Dairy, you have Parag Milk, Quality, Hudson Agro, all of these on the back of Maharashtra government announcing a 25 per litre as the minimum rate of milk price for dairy farmers. And then finally you have Reliance Communications, which has said that they will meet bond holders for a proposal relating to bond restructuring on August 10th. I'm not sure how much it will react today.
Okay, let's wait and watch. Maybe the milk companies stand out, and again, don't quite know the impact there. We'll ask Avinash about it. But what about the results that came out post-market hours, Nikki?
Good set of numbers, mostly reported by most of the companies. I'm going to start off with Omax Auto, which has reported a 13% growth in its top line number at a number of around 277 odd crore. In terms of profitability, the company has reported a profit of a 0.5 crore as compared to a net loss of 21 crore that we saw in the corresponding quarter. It has been a good performance on operational front too, looking at an EBITDA of 10.3 crore in this quarter as compared to an EBITDA loss of 13 crore. Clearly, it's the operational efficiency which comes on account of the employee benefit expenses which have dropped sharply for this company. Next in the list that we're tracking is Shree Digvijay Cement. Good set of number reported by the company. Revenue has risen 23%. Net profit has shot up more than 4 times for this company. EBITDA of 50% growth there. Margins remain higher at 12.6% as compared to 10%. The main benefit is coming in mainly from finance cost, which has now dipped to 77 lakh as compared to 3 crore in the corresponding quarter, on account of which you're seeing good set of numbers on the bottom line front for this company. ABB India, again good set of numbers driven by better product mix and cost saving measures undertaken by the company. Revenue is up by 21%. Net profit, we're seeing a 36% uptick. EBITDA too has shot up more than 30% for this company. Margins have risen to 7.2% as compared to 6%. Hudson Agro product, that's another good one that we have. Operationally, it's a good performance from the company. Top line, bottom line, we're looking at a muted performance by Hudson. Revenue is up by 6%. Net profit is up by 7% for this counter on year-on-year basis. And EBITDA, we're looking at a 19% growth there at a number of 123 crore as compared to nearly 100 crore that we've seen in the corresponding quarter.
Well, Hudson Agro may not get too impacted because of the milk dairy prices uptick because of the small presence that it may have had in Maharashtra. But let's wait and watch if the results bring about some reaction. Saloni, rather, very quickly, Bajaj Finance, what did you make of the numbers?
So, Bajaj Finance reported a good set of numbers yesterday. Their consolidated revenues and net profit grew by 16 and 41% respectively. Their lending business, which contributes 56% to the top line, saw a growth of 35% in their lending AUM. Also, asset quality improved by 10 basis points sequentially. That apart, their general insurance business reported a gross premium growth of 23% YOY, largely driven by improvement in combined ratios, lower claim in their health and motor insurance segment. On the contrary, we have seen the life insurance business continues to show some decline in their profitability despite some improvement in persistency ratio. And Nomura believes that they expect Bajaj Finance FinServ to remain a long-term compounder, but given high valuations for their lending business, that is Bajaj Finance, it might lead to some near-term concerns for the stock. Neeraj.
Hey, thanks a lot, all of you, for giving us those updates. A couple of things stand out. Avinash, if I can actually come to you on the dairy companies, this 25 rupees per litre price in Maharashtra, does it have a material bearing on the listed space?
I think clearly sentimentally, Neeraj, it could have an impact, but I think companies have a networked sourcing kind of policy, so I don't think it's going to have an immediate impact. And I think obviously if this matter is resolved in the near term, then I think clearly one would definitely see companies which have got value-added products in the dairy space would do much better because they have significant amount of pricing power, and obviously for a branded product, customers are willing to pay a a small to marginal uptick in the price. So I think clearly companies which are purely, dairy companies having a little less branded presence could be hit. But, companies which have a decent urban kind of exposure in the branded dairy space, I don't think this should be a problem. In fact, dairy companies should do exceedingly well, because last time they were impacted by GST. Obviously, there could be a little bit of margin pressure, but obviously, this could get compensated by better volume growth in the coming quarters.
Companies, Avinash, they have more of value-added products, I guess, so the impact could be lesser on them.
Yeah, I think that's the, the logic, because clearly raw milk may not have that kind of value addition, but dairy products obviously carry a little better markup.
Okay, so that's about the dairy companies. We'll see how the stocks react to that news. But let's get you some technical check going on the markets and see what our experts are anticipating how the opening could be today. So let's bring in Shrikant, Chouhan, Senior Vice President for Technical Research at Kotak Securities. And also joining us on the show is Dharmesh, Shah, AVP for Technical Research at ICICI Securities. Good morning to both of you gentlemen, and appreciate you joining us today on Bloomberg Quint. Shrikant, let me come to you first. Last 2 days, there's been a correction that we've seen for both Nifty, Bank Nifty. It's been a volatile session. Are you using these dips to buy into it? Because if I look at the recent high of 11,070 or 75, there's no follow-on buying which is coming there.
Good morning, everybody. See, what you're saying is absolutely right. The market is in the consolidation. In fact, in the previous week also, I mean to say on the last Friday, when we were discussing the market was somewhere around same levels. And we were of the view that in case if market falls, then we should look for adding some long positions. But since then, in last 4 or 5 days, the market remain in a range, and it failed to cross important area of 11,080. In fact, it failed to cross its all-time high also. So it shows that there is a pressure at higher levels. And today, if there is a very short-term view, then one should look for taking short positions in the market, because 10,925 acted as a very good support in last few days. And if it breaks that, then some more decline towards 10,880, 860 is not ruled out. So very first, we should look for taking some short positions, because the currency is also around 69 or above 69. We are of the view that there is no point in taking any contra call of going long if there is any fall during the day.
Interesting. Dharmesh, what about you? What's the trade that you would initiate today on the key indices?
Yeah, good morning, Neerja. Yeah, definitely, I think so. The things looks to be more positive, I think so. If you look at the structure overall for the Nifty in the last rally from where we see from 10,550 to 11,078, the rallies are getting bigger compared to the previous rallies. Previous rallies has been the range of 350 to 470 points. The current rally has been around 520 points. So if you look at the overall long structure of the market from the medium term perspective, I think so things are getting positive for the Nifty. Though there are 4 to 5 stocks which are having a weightage on the Nifty, but eventually we believe, I think so, that what the last 7 trading sessions we have been seeing is the market has been trading the 155 points range, in the range of 10,900 to 11,078. 10,925, 930 remains to be the very strong support for the Nifty, and we expect this to hold on the closing basis. Maybe today maybe some bit of a volatility on this big event of no confidence motion. But we believe, I think so, buy on dips should be the strategy going on, not from the intraday but from the positional point of view. We believe, I think so, 10,990, 10,900, 10,880 remains to be the strong support for the Nifty, being a 38% retracement, and eventually market will move towards a more of a higher base formation, and eventually should challenge the life high, which is around 11,172 in the coming weeks. So I think so buy on dip should be the strategy for the day. Any dip towards 10,920, 30 should be looked as a buying opportunity for a target of 10,975.
Okay, buy on dips is what Dharmesh is advising on Nifty today. But on to a special segment, that's Bloomberg Edge, where Jayesh Khilnani tells us about a patent that a Bloomberg terminal has thrown up on a stock. Hi Jayesh, good morning. What's on your radar today?
Morning, Navneet. It's Bharti Infratel, and for good reason as well, because it's trading below all 3 key moving averages, and it is one of the top 10 Nifty losers so far this year. And Bloomberg's fear and greed indicator, which is a proprietary indicator, has also given a sell signal signal as of yesterday's close. Let's first have a look at the fear and greed and the theory behind it. Like I was telling you, it's a proprietary Bloomberg indicator, and it uses the spread of two weighted moving averages of the concept of true range as one of the key inputs for calculation. Not only does it oscillate on a zero baseline, but because of that, it becomes very simple to interpret. You just have to follow the color and you'll get the buy and the sell signals. You buy when fear turns into greed and sell when greed turns into fear. And that is exactly what has happened on the chart of Bharti Infratel. Let's have a look at that. So that's the last 6-month chart. And you see that there has been a constant decline for the stock itself. The bottom panel shows you the fear and greed indicator. And if we zoom into this, the last bar, this is a red bar, which means that there is a sell signal. Also, what's important to note is that if you have a look at the pattern, every few days it gives you spikes of green, and then the red bars actually take over. So is this the start of a new downtrend? We'll have to wait and watch, but as of now, this is a sell signal on the fear and greed.
Jesh, efficacy of this?
So Navneet, total profit in the last 1 year would have been close to 25 to 26% if you had initiated sell positions on all of the indicators.
Okay, thanks a lot, Jesh, for bringing that from the Bloomberg terminal. But talking about the bets that our technical experts will be taking on individual stocks today, Shrikant, what are you betting on?
See, for the day, I would like to go with those stocks where there is a short-term trend, but which is like much better than other stocks. We like Apollo Tyres, which closed around 278, 279, and in fact, after this news flow on the load factor, we feel that all these tire stocks should do well. At the same time, if we see the volume and price pattern, both are matching, as well as delivery percentage. So we feel that Apollo Tyre is like heading for the levels of minimum 290, 295 in next 1 or 2 days. It's a buy at this price with a stop loss at 273. The other stock on which we are bearish is ICICI Bank as well as Bharti, but ICICI Bank is falling lower top, lower bottom, and it is heading for the levels of 250, that's the view. So currently it is around 260, so with a stop loss at 265, we should look for initiating short positions on ICICI Bank with a target of 250.
Okay, so interesting ideas from Shrikant. Dharmesh, what about you? Your stock recommendations for the morning?
Yeah, stock for the day, we believe, I think so, FMCG sector should do good in today's trading sessions. So we believe, I think so, ITC, I think so, the one stock which has been consolidating in this range of 268 to 72. We believe, I think so, a breakout about 272 is expected in ITC for a target of around 277 to 78 on the intraday basis, keeping a stop loss of 267. So ITC remains to be on the buy side. Second being on the sell side, we believe, I think so, Shriram Transport Finance. We have seen a sharp cuts from 1500 to 1100, and some bit of a technical pullback was seen in the last week. We believe, I think so, this technical pullback should be looked as an opportunity to go short in Shriram Transport Finance. So overall trend looks to be the weak. On the intraday basis, I think so, 1164 could be the target for Shriram Transport Finance on the purely from the intraday point of view, keeping a stop loss of 1197.
Okay, so that's a sell call coming on Shriram Transport. The stock was down nearly 4.5% in yesterday's trade. Well, the other stock which fell among the Nifty constituents, and we've been discussing that stock, that's Hindalco, which fell nearly 7 to 7.5%. Avinash, what did you make of the news? I guess the initial reaction which came in is because of the valuation. I guess if you look at the trailing EBITDA which Aleris had posted, the valuations appear, EV by EBITDA appeared to be higher than where Hindalco is currently trading. But after a lot of brokerage reports have come by, they're betting on forward EBITDA of Aleris. So how do you think that will pan out in case if this deal fructifies?
My sense is, I think, unless we clearly know what's the kind of valuation, this company would, Hindalco would pay, our sense is that this possibly means that little amount of debt further gets added onto Hindalco. At least in the near term, Navneet, it's difficult to take a call as to what kind of incremental, addition on EBITDA and top line this would make. But overall, I think over the next, say, 12 to 15 months, if the operations do stabilize and they obviously, are able to scale up the operations there, then I think it could be a good opportunity to look at Hindalco. I think alumina prices have also started firming up. So to that extent, I think, Hindalco definitely seems to be well positioned.
But it's very difficult to take a bet on any metal companies. They've started firming up definitely, but if you look at the prices since April for both alumina and aluminum have been correcting. So also they take up more debt for this acquisition. Do you think going forward their debt reduction plan could be a hindrance then?
I think clearly, because this acquisition, if it is done, obviously a large proportion of this would be funded by debt. Although it does have a decent amount of operating cash flows, our sense is that until the deal details are not finalized, I think we could possibly not see a very strong secular trend on the stock. Obviously, after the deal is through, our sense is that the markets would obviously like to give it some time before it stabilizes, and we hear from the management as to how the growth numbers would pan out.
Okay. Just looking at companies that have come out with decent numbers, Avinash, do you track either ABB or a small tiny toon Digvijay Cement or maybe even a Hudson Agro? Actually, we spoke about dairy, so I'll restrict myself to ABB and Sri Digvijay.
No, I think ABB numbers have been pretty good. In fact, I would believe that this is on the back of the fourth quarter also, when numbers were pretty solid. And I think the markets now possibly look at industrials as now more positively, because earlier what was expected to be just one quarter, I think the management has delivered now in the second quarter. In case of valuations, the stock doesn't appear cheap, but if you look at the order book and the kind of execution, and hopefully, if macros do improve, our sense is that this could definitely be the next stock to obviously watch as far as further re-rating would be concerned, because clearly this is an MNC stock, very little debt on the balance sheet, and order book being good, I would believe that this factor could play out on all the other industrials within this segment.
So is it in the realms of watching the progress, or are the last 2 quarters numbers comforting enough for you to initiate an investment here?
No, I think definitely near some amount of nibbling and buying could be done. In fact, if the market provides an opportunity for some sort of a dip, I think these companies would ideally be well positioned, because clearly now we seem to be in a secular uptrend as far as order book execution and new order wins are concerned.
Shrikant, just about 20 seconds. Any quick thought on ABB or L&T for that matter?
Neeraj, it really looks good, because the way the stock has forming its bottom, it is diverging positively based on RSI, based on price pattern. Also, the stock has formed multiple bottoms close to 1150, 1100. So we are of the view that yes, if there is any specific sector-specific activity, then this stock should do extremely well. Currently, it is around 1150, but we are expecting if there is any performance, then 1350 or maybe 1450 is not ruled out, which is decent upside.
Okay, just few seconds to go for markets for the pre-opening rates to come up on your screen. Remember, SGX Nifty has been suggesting just a flat to negative start of nearly 15 points. Let's see how the opening rates pan up as of now. That's the initial rate which will come up on your screen, pre-opening rate. Okay, don't go by these rates actually. They're going to settle down by 9:08. So currently Sensex is showing a downtick of nearly 100 points and Nifty showing an uptick of nearly 26 to 25 points. Let's look at a couple of stocks which will react to the numbers. Pull up Bajaj Finance. Let's see what that's doing in the pre-opening session, and also Bajaj Finance, which recovered quite sharply in yesterday's session. So reacting positively, at least in the pre-opening session, up almost 1%. And Bajaj Finance, remember that, recovered nearly 5.5 to 6% yesterday in the intraday trade post its numbers. So that's also showing an uptick of nearly 1%. Pull up Hindalco, which was the top loser among the Nifty constituents yesterday. Let's see what's happening there. It also touched its fresh 52-week low. So a flat opening is what we're seeing on the screen for Hindalco. Let's see how the final rates pan up. But stocks like Hudson Agro, ABB India, which will be reacting to the numbers, let's just pull up those as well. Hudson is showing an uptick of nearly 1.5%. And also Sagar Cements came up with the numbers where revenues were up, but the profits were down nearly 42%. Sagar Cements showing a downtick of nearly 1.5%. And I also want to pull up ITC and Reliance Industries, because both the stocks contributed the most yesterday. ITC was up, but in the pre-opening session, it's just showing a flat trade, and Reliance Industries is showing an uptick of nearly 1.5%.
I just want to pull up the currency first and see what's happening from 69.05 in trade yesterday, 69.02. Well, just a little bit of a pullback, but this might be short-lived. Watch out for what, 69.09 or thereabouts. So the rupee, the yuan in China as well has had some depletion. Let's wait and watch what happens to the currency today. 5 paise away from all-time lows. Bring up the bond yields as well. Yesterday hardened a little bit, 7.78. Okay, so flattish in comparison to what they did in trade yesterday as well. A bit of a strengthening. Okay, now as I said, a completely flat trade. I doubt a Digvijay Cement would have some big moves, but you never know. The results were good. So let's just see what's happening to that tiny toon. Digvijay Cement will come up on your screen. Well, 6.5% higher. The numbers were good. Let's wait and watch. Reliance is showing some initial signs of an uptick, and Hindalco is showing some bit of recovery from the clobbering that it took in trade yesterday. So let's wait and watch what happens there. Just a couple of mid caps and small caps before we go on to Sumit Sarkar for the top brokerage calls for the day. There's an unnatural downtick in Time Techno Plus. I don't know if there's some news out there, but the stock has gone down some, 19%. Okay, now it just recovers a bit of lost ground. Yeah, so all over the place, Time Techno. Let's wait and watch. Dilip Bilkon was under pressure yesterday. Looks like it'll be under pressure today as well. Wakrangi was under pressure yesterday. Looks like it will be under pressure today as well. Manpasan, similar story. Quality, similar story. So, well, there's a lot of pressure, and Coromandel somehow has just gone off completely. It's sub 370 now, sub 380, 375 points now for Coromandel International from highs of about 580 and the promise of DBT. Somehow these stocks have just gone off completely. Okay, not too many movers otherwise, but maybe Marico could move. That could be one of the brokerage notes that was interesting. But Sumit Johnson with the top calls for the morning. Sumit, what is standing out from amongst the brokerage calls for you?
Good morning, Neeraj. On the big brokerage calls for the day, first we have is IDBI Capital on DCB Bank. Now, the brokerage has initiated coverage on this bank with buy rating and a target price of 210. Now, according to the brokerage, the bank's balance sheet will double in the next 3 years as the bank realigns its business model towards mortgages, SME and the MSME sector. Now, the bank has more than doubled its branch network over the last 3 years, and as this bulk of branch expansion is now done, the brokerage is expecting the operating leverage to kick in from financial year 2019. Now, the branch expansion model of the bank is as such that it is designed to give a break even in the next 18 to 22 months, says the brokerage. And along with this, the robust asset quality of the bank will support its profitability going forward. Now, the brokerage is expecting the bank's loan book and net profit to grow at a compounded annual growth rate of 25% and 31% over the next 2 years. And lastly, it sees that the premium valuations would sustain for DCB Bank as its fundamentals are improving going forward. Second, we have is BofA ML on Marico. Now, the brokerage has maintained its buy rating on the stock but has raised the target price to 420 from 390. Now, the copra prices are down nearly 19% from the start of the year, and the brokerage believes that this fall is cyclical. Now, the brokerage is expecting healthy earnings revival starting from the second half of financial year 2019 on the back of receding raw material pressure, revival in rural demand and market share gains coming from GST. Now, the brokerage is expecting these factors to lead to a strong earnings growth for Marico over the next few years, and it is expecting the company's EPS to grow at a compounded annual growth rate of 25% over FY18 to FY20. Lastly, it says that Marico is better placed in the consumer staple sector when it comes to valuation.
All right, Swami, thanks a lot for bringing those big brokerage calls of the day. Dharmesh, Marico on the charts, how is that one looking? We've seen some traction coming by, but again, in the last few sessions, the stock's been muted.
Yeah, definitely. I think so. If you see overall FMCG space, I think so looks interesting. I think so. Most of them are at their life highs. But coming particular to Marico, I think so. Marico looks positive. I think so. It's a good making on the weekly chart for top higher bottom formation and a good base formation in the range of 325, 330 in last 6 months. I think so. Then eventually we have seen a good breakout with strong volume about 345. We believe I think so Marico could be moved towards 370, 370 if one has a time frame of 3 months. I think so. Keeping a stop loss of 315. I think so. Marico is much better placed in the FMCG space.
Okay. Sorry, Avinash, did you have some thoughts on Marico? I mean, you know, Yatin did a chart of the day wherein since February the copra prices have gone one way and Marico stock has gone other way. Since February, there is this direct inverse correlation, which we'll obviously see, but it's more so evident in the stock price movement. Can this continue primarily because of the decline in copra prices?
No, it should continue. Our sense is that copra prices form to be a major cost component for Marico, and I think this would definitely get reflected in better EBITDA margins. I think even if the company does pass through some of the benefits of the copra prices, there is a incremental scope to assume that EBITDA margins could obviously expand by at least 50 basis points. And our sense is that this is one FMCG counter which has actually not outperformed as compared to the bigger frontline players like a lever. So to that extent, I think Neeraj, even at these levels, if one were to take a slightly medium-term call, Marico definitely deserves to be re-rated, and I think FY19 numbers could definitely be much better if the volume growth also kicks in. If we have close to double-digit growth and plus the cost benefit, then I think obviously we could see better margins and profitability in the coming quarters.
All right, we'll see actually how the numbers for the first quarter pan out. That's going to give us a good picture of how the recovery is shaping up after the copra prices have been softening. As Avinash mentioned, actually, the margins were under pressure in the last few quarters because of higher copra prices. Hence, the reason the underperformance that you saw for Marico vis-a-vis the other FMCG players. But one stock which has bounced back and has been trading quite firmly in the last few sessions among the Nifty constituents is Titan Company. Remember, the stock took a beating after the company gave an internal guidance that the jewelry sales may not have met internal targets which the company had set for first quarter. Shrikant, on the charts, would you take a bet now around the levels of 870 for Titan, considering yesterday also in the last 7 days, in fact, it surged about 7 to 8%?
See, certainly it looks good because the stock has overbitten. It has fallen to its important support area of 820, 810, and from there it recovered. But now it is almost 10% up from its bottom, and the way the condition of market, we feel that if there is any correction, then we should look for adding this stock with a trading perspective. But if there is a medium to long-term view, then certainly even at this price it's a buy, because we feel that it was a necessary correction. Correction was due for the stock, and now the stock has corrected to its important area. Now it is again rebounding, and maybe in next few months we can again see the levels of 1000 plus. So it's a buy, but if there is a medium to long term view, and if there is a short term view, then I think 850, 845 looks really a good level to enter into long positions.
Well, Titan clearly off the lows, but let's wait and watch if it could make a dash towards the levels that it used to trade at. I think the most important stock though is Hindalco. As 8 minutes have settled down, Hindalco looks like it's starting off marginally in the green. We discussed it fundamentally. Technically, Shrikant, the 7% downtick yesterday, some bit of a pullback. Will this be an extended pullback, or it's difficult to say that?
See, Neerja, yesterday the fall was severe and it was backed by good volumes. So I am of the view that if there is any bounce back, then again that will come under pressure. I'm going to say those who are stuck in the long positions, they are going to liquidate their positions. So I am of the view that finally it is heading for at least 190, 185. In case if it falls to those levels, 185 is the best levels to buy because the stock is broadly into corrective pattern, and the corrective pattern is going to end somewhere around 185. So wait till the stock falls to these levels, and if there is any bounce back, then I think close to 205, 207, again we should look for reducing long positions.
Metals aren't really correcting in the session today, though. Keep that at the back of your mind. LME showed about 1.5% dip in almost all of the base metals, but it's not really showing on the bourses today. Vedanta may be marginally off, but not otherwise. Anyways, minutes away from market open, let's tell you all that you need to know to stay ahead in trade today. Wipro and Bajaj Auto are the key index names that will report the numbers today. From the broader markets, Seat, Havells and Bata India will disclose numbers.
Among companies that reported earnings post-market hours yesterday, Bajaj Finserv, ABB India, Sri Digvijay Cement, Omax Auto and Hudson Agro Product reported strong numbers.
Will Fortis be third time lucky? The board will seek shareholder approval for the IHH deal at the EGM on August 13th.
In a bid to ease the burden of dairy farmers, Maharashtra government has announced 25 rupees per litre as the minimum rate for milk.
Amongst brokerage calls, Bank of America Merrill Lynch has raised Marico's target price to 420 from 390 thanks to falling copra prices.
And lastly, Reliance Communication is set to meet bondholders with a restructuring proposal in London on August 10th. Okay, so watch out for all these stocks, how they open in today's trading session. But I think we're getting some queries. Avinash, any thoughts on Tata Global and Tata Coffee? I remember there was a news break by Bloomberg where they suggested that, they could be looking at consolidation, bringing all the beverage companies under one umbrella. What are your thoughts? Because after that, there was an initial, spurt in prices, but the stocks have cooled off.
I think clearly, as far as Tata Global is concerned, Navneet, I would believe that longer term, the kind of brands and the kind of, consumption products which they have positioned, I would believe that, from a longer term perspective, definitely growth momentum looks pretty promising. Tata Coffee is already a subsidiary of Tata Global. So I would believe that, merging both these companies into one would obviously bring more synergies and some sort of cost benefits. But overall, I think whatever the management mentioned, I think unless we see a decent amount of traction in the near term and actual implementation, I think these stocks possibly could remain range bound. I think probably the markets would be looking at least the next 6 odd months before some concrete action on these developments happen. But yes, Tata Global definitely looks interesting if one were to look at the next say 12 to 18 odd months.
One more company which came out with the earnings was GNA Axles, and I remember you giving a call on that one. I think the numbers were just fine. There was a mild dip in the margins. Because of that, the stock corrected yesterday. Any thoughts on that?
No, I think, Navneet, margins getting down are quite obvious. Commodity prices have moved up, and I think most of these auto ancillary companies don't get immediate pricing actions implemented. So I would suggest that looking at the kind of growth in the commercial vehicle, the tractor segments and the Class 8 truck segment, I would believe that this stock still deserves to be re-rated. And I think clearly from a mid-cap kind of basket, I think this is one quality player which can possibly deliver very well for the next say 12 to 18 odd months.
You would invest at the current level?
I think clearly around 400 odd rupees, Neeraj, clearly with earnings visibility strong. And the fact that this company is actually catering to very strong product segments like tractors and Class 8 trucks, our sense is that we could possibly see at least a price of around 450, 475 if one were to take the next 12 to 15 odd months.
Let me make it difficult for you. GNA Axle versus Bharat Forge.
I think interestingly, Neeraj, Bharat Forge promoters bought about 40,000 shares a couple of days back. So I think that gives a clear indication that the stock is definitely looking attractive. I think if
Which
the rupee,
one? Bharat Forge, right?
Yeah.
So what would you buy then?
I would obviously
you can't buy all the three, right? So if that buy one, what do you
I would definitely buy Bharat Forge for the simple reason that they have a large export exposure. I think if the rupee crosses 70 odd rupees.
You know what, you're talking about rupee, it's already hit all-time low today of 69.11 to the dollar. Remember, the earlier low was somewhere about 69.09. So we've reached that mark in today's trading session. And in fact, yesterday we saw some bit of correction coming in for dollar index after the commentary from Donald Trump, but still we're seeing depreciation for Indian rupee in today's trading session. That's 69.12. Let's see if there is any sort of intervention which comes from RBI today.
Yeah, the only respite, if at all, would be that it's not been a slam dunk for the rupee.
Yeah.
There has been a slide down towards 69, then a pullback, then a slide down. Arguably, some intervention might have happened because there was some 2 days of sharp pullback as well. We'll talk to Tirthankar Patnaik about the currency as well. He's joining us moments from now. But just 50 seconds left for the markets to kickstart trade. Time now for the top pick for the day. Dharmesh, to you first. Your top call for the day today. Just 20 seconds left for the market to open. Quickly.
Yeah, definitely. Yeah, top pick for the day remains to be the ITC for a target of 277, 278, keeping a stop loss of 267.
Shrikant, your top call?
I would like to go with Apollo Tyres, which is just 10% away from its all-time high, and it is doing well in terms of volume as well as price. So it's a buy at this price with a target of close to 290.95, and we can keep stop loss somewhere close to 273.
Okay, gentlemen, Shrikant as well as Dharmesh, many thanks for joining in today and giving us your perspectives. Avinash, stay on. We'll just take in an opening thought from you post-market open. But this is how the markets are starting off in the session today. We'll have a start which is flattish, and that's how it's turned out to be. The Nifty Bank too, while marginally in the red, but a flat day. Nifty and the Sensex very, very flat. The mid caps and the small caps, maybe marginal downticks. Yes, marginal downticks, about 0.25% for the mid cap space. The small caps just about lying flat. Bring up the heat map and let's try and see what's moving and what's not. We have a lot of losers, I must say. The OMCs continue to crack lower, so HPBP IOC down. Vedanta amongst the metal names is down. Bajaj Finance corrects a little bit after hitting new highs post results yesterday. It was a very volatile day of trade yesterday, by the way, but Bajaj Finance is down about 0.75%. On the gaining side, some gains for Hindalco after the slam dunk yesterday. Reliance continues to rise higher, which is actually a good thing, in part giving some bit of support as well, but otherwise not seeing too many movers which are very enthused in early morning trade. A fair bit of red on the screen on the Nifty at least. Let's highlight 2 or 3 pockets before I hand it over to Navneet for trying and figuring out what's happening in the markets by and large. Some newsmakers and some market movers. Firstly, the companies that came out with good numbers. No such luck for either of them. Actually, maybe ABB starts off marginally positive, but that's about it. Just marginal gains, about 1.5%. What about companies which were doing very poorly in trade yesterday? Let's try and see what's happening to the top losers. So HT Media, Mindtree, L&T Info. Each of all these 3 names actually starting off on a flat note. So no repeat moves from what happened in trade yesterday, but this might be early days. Let's wait and watch what happens. Mindtree, in fact, bounces back a little bit from those lows. Last but not the least, One stock that I do want to highlight is Alembic Pharma and the EIR for Karakhadi plant, and that stock marginally higher in trade. Navneet, what are you spotting?
Well, Neeraj, it's largely a flat opening that we are seeing for both benchmarks as well as the broader market indices. So your usual suspects always top the list. So Vakshangi, Quality, 1% beverages, all of them are down between 4 to 5%. Even under pressure today is Dilip Bilkon. Remember, the stock saw some bit of recovery in the last few trading sessions, but once again, I believe it's come under pressure. So Dilip Bilkon is open with cuts of nearly 4%, and Minda Industries is down 3.5% in today's trading session. Neeraj already highlighted the oil marketing companies. Remember, rupee is at all-time low, so that's not going to augur well for these companies. DB Corp, which was down in yesterday's trade, is down once again in today's session. On the gaining side, some respite actually for Mindtree after tumbling nearly 10% in yesterday's session. Mindtree is seeing some bit of positive opening in today's session. Kajaria Ceramics is opened higher with gains of 1.5%. Also, you've got RBL Bank, which reported its numbers yesterday. That too is showing a positive opening. Among the stocks which are in focus today, let's just pull up the dairy companies. Parag Milk, Prabhat Dairy, Hudson Agro, and let's see what they're doing on fixing the procurement prices in the state of Maharashtra. So Prabhat Dairy, not too much of a reaction, 0.5% higher. Hudson Agro up 1%. Remember, Hudson also came out with the numbers where the margins were slightly higher in the versus the corresponding quarter, so that's reacted positively. And Sagar Cements, let's just pull up that one too, which came out with the numbers. Net profits for the company for the quarter were down nearly 42%, and you can see the reaction on the screen, down 3.5%.
Well, it's showing in the way some of the stocks are moving around. Well, let's get in some initial thoughts on how trade has shaped up as well. Avinash, for every time that we hear some bullish commentary coming in on the oil marketing companies because the valuations are a lot more favorable, there come 2 or 3 days of substantial downtake. Not to say that the stocks won't rise, but it clearly shows that there are willing participants out there wanting to get out of the stock or even wanting to short the stocks, these stocks, BPHP, IOC. What do you do here?
No, I think clearly the bigger challenge here is the rising crude price, and I think clearly probably this is one factor which is going to play a spoil sport for most of the oil marketing companies. Clearly, I think going forward, how the oil companies actually counter this is going to be extremely important. But one thing is very clear, that if crude remains in a range of around 65 to 70 odd dollars, Neeraj, you're going to see a lot of challenging headwinds for these OMCs. I would believe that companies like Reliance, or for that reason the upstream companies would definitely be well positioned now. I think clearly most of the OMC companies have become trading plays, but within this I think HPCL looks pretty strong. The merger with ONGC also gives them a kind of comfort because it gets consolidated with ONGC numbers.
Okay, Avinash, we'll leave it at that. Many thanks for joining in today. Really appreciate your time, and thanks for giving us your thoughts as well. Well, the key takeaway from Avinash Gorakshakar's conversation, Bharat Forge, something that he believes is a company that people could look at with renewed vigor. Infosys starts off on a good note. Actually, IT could have a reasonable day. Look at the currency. Typically, people tend to correlate. Let's wait and watch what happens there. Let's get in the market voice, important one at that. Tirthankar Patnaik, strategist at Mizuho Bank, joins us right now on the show with his thoughts. So much to talk about. Tirthankar, I would have wanted to start off with the no confidence motion, because that's been playing its part on the market's mind, but can't not talk about the currency to start off with. 69.11 at all-time lows today. Must say though, it's been a gradual fall rather than a slam dunk one. What do you make of this? Is there more in store for the rupee to weaken? Because that's by and large the belief.
So if you look at if you look at the real effective exchange rate, we are still at around 106 or 107 or thereabouts. So purely from that perspective, one could expect some kind of depreciation on the currency going forward as well. But if you look at just pure market factors, given the pressure, given the uncertainty that we are seeing in the global markets, given the the uncertain environment in general globally, plus rising crude prices, which do have an impact on India, so the pressure on the currency is fairly strong. And so one could expect the INR to go down further before it starts stabilizing.
Tirthankar, do you think that the trend which will continue in the second half of the calendar year as well? We've seen the crude prices depreciating, we've seen the rupee depreciating, and all these factors may not augur well for the macros of India. How should one play the theme now going ahead? We've seen the IT stocks already doing well.
So, if you just compare this year versus last year, clearly macros are on a much dimmer, they have much dimmer prospects. You are looking at a 30% premium to, crude imports, which are, vitally important for India. That itself hurts our current account deficit in a meaningful way, our trade deficit and the current account deficit. People usually compare how, our current account deficit or the external situation is versus the last time we were in such a situation, which was around in mid 2013. Clearly, India has come a long way from there, and the kind of volatility we saw on the rupee in mid 2013 is not something we are seeing now, but the direction remains clearly due south. Given we have a higher trade deficit, we have a higher current account deficit, we are looking at much higher cost of funds because the rate cycle has finally turned around. You have inflation not just from the fuel aspects, but also from core, which has gone to 6% plus levels. So there is some amount of strength building up in the economy, and parts of which are overheating, and therefore macros will start factoring that number, that kind of environment. And to answer your question, do we see these things panning out in the second half? Clearly the uncertain environment is likely to remain, starting with the Sino-US trade wars, where we've not seen any kind of, capitulation at this point. We are significantly, looking at numbers now becoming bad enough to be, affecting, global growth prospects. We had the IMF World Economic Outlook update coming up. They stopped short of downgrading GDP numbers, but that could start happening as well. So until we see some kind of resolution there, you will see the pressure building up on the external front. On the domestic front, if the RBI pauses after a rate hike, the August rate hike is almost a given. But if post that there is some kind of comforting commentary from the RBI, you might go back to the recovery story, and we will be looking back at how asset quality has affected banks, and are we looking at credit growth coming back up. So the recovery clearly seems to have slowed down in the interim, and at least the beginning of second half looks pretty dicey at this point, and valuations are not in support at 21 times forward earnings.
Those concerns, Tirthankar, they remain. The credit growth that we've not seen for the longest time, and also, investment by the private sector, that's still lacking. But, these concerns remain. You've got rupee depreciating, you've got crude prices inching higher. But there's another factor, actually, which could be impacting the Indian markets, and that's politics. We've got very important elections, state elections lined up. Then we've got general elections for next year. And today, vote of confidence. Well, not to worry there. I'm sure BJP will win that, considering they have the majority in Lok Sabha. But how do you think these political factors can impact the markets going ahead now?
Since mid-14, one particular factor that we were not looking at for India was political uncertainty. In fact, this was something that was, when you compared India with the rest of the emerging market peers, you typically looked at a much more stable political environment, something we had not seen in the last many years. And in terms of decisiveness from the government, right or wrong, things have been pretty playing out on those lines. Now the no confidence motion, which will be something, it's something that's happening after 15 years. The opposition had asked for it in, right around the budget session, but the government has gone for it now. The numbers, as you rightly pointed out, the arithmetic clearly helps the ruling party. NDA has more than 315, around 315 odd seats. What would be interesting are a couple of things. We saw some kind of opposition unity right after the Karnataka elections. So one has to see if that unity actually pans out in terms of numbers. The issues that are likely to be raised in the no confidence motion are of not much consequence for the market, despite however much they may be important for India as a country. So from a market perspective, from an economic perspective, what would be purely interesting is if you are seeing opposition unity, which could hurt into BJP's prospects into the in 2019. There are many states where there was a very good performance by the BJP in 2014. UP is one case in point. So opposition unity will clearly show if we are likely to look at those numbers again and with a bit more concern. What will be also interesting to see is what happens with parties which are not part of the UPA also. So you have parties which have abstained, or are, they've stopped short of joining either the UPA or the NDA. You have the BJD, you have the TRS, you have the ADMK. So these are parties whose behavior would also be, interesting to watch. While the numbers will be supportive for the NDA, I mean, we'd be interesting to, we'd be keen to watch whether these companies are, these parties are likely to align with the NDA in terms of stability for the 2019 elections.
Tirthankar, so at the end of today, and assuming that it turns out as the market is expecting it to be, or as people are expecting this no confidence motion to turn out to be, what's the takeaway for the market here? Would the numbers have any kind of material impact on Monday morning's trade? Because we have the Prime Minister speaking last, but does the outcome of the numbers, if it's sub 300 or above 300, or in case of parties abstaining, sub the halfway mark or sub the 2/3 mark versus above the 2/3 mark, have any material impact on market sentiment on Monday, or Monday onwards rather?
Well, like I said, the only sense is, for the market, it's a given that the no confidence motion should not have much impact on the government's functioning. What would be interesting is opposition unity. So if you are seeing, parties coming around and voting together in support of the no confidence motion, that will be something interesting for pre-2019 calculations. So we, like I said, we are looking at a repeat performance by the NDA. That's the base case for 2019 elections. But the arithmetic in certain states would have to be reworked, and that in turn would have an impact, bearing on what kind of numbers are we looking at as a base case for the 2019 elections. The third part is, parties which are fence sitters for now. Let's see which way they work out. So, in terms of numbers, things are fine. But in terms of opposition unity is what one would be keen to watch for, in the no confidence motion today.
Okay. What drives the markets from now until whatever is possible to predict, Tirthankar? Let's say the next 12 months until the May 19 elections, what drives the markets higher? Is it the currency sensitives which have the natural tailwind, so the exporters benefit out of it? And the consumer names continuing what they are doing, or do you believe that it could be other spaces that could come to the fore to hold the markets up?
So let me take a step back and let's see what our strategy is. So our strategy is for an India recovery story. We believe that the India recovery story is likely to play out for a while now, for the next 2 years, 3 years even. And at this point, consumption is fairly strong as a theme, and anything that supports consumption, anything that supports the financing of consumption is something that's likely to drive the market, and we would be partial towards those sectors. So you have autos, you have FMCG, despite all the valuation, you have private financials, you have NBFCs. So those are all playing the theme for consumption in India. You also are likely to expect some kind of a turnaround in investment, although we don't expect that to happen anytime soon. But investment as a theme is likely to support India, maybe after a couple of quarters now. The global cyclicals or INR based sectors, they are in vogue right now, given the performance of the INR. So for the next 1 or 2 quarters, when we expect pressure on the INR to continue, one would expect information technology, pharma, to some extent even metals to be the parts of the portfolio which are likely to do better. But our base case remains one of a consumption-based recovery, which will slowly turn into higher investment, and which will slowly turn into higher capacity utilization. We've had many false starts over the last 4 years. Many times you've had good numbers for investments for a couple of quarters, couple of months, only to be slowing down again and again. We are seeing something very similar happening now. Last 2 quarters we saw investments start picking up, but now again you are looking at June data for new project starts is meaningfully muted if you go by CMI figures. So one has to wait for the investment theme to pick up, and we don't see that happening anytime soon. Until then, we will be having a consumption focused portfolio, expensive but something to hold on to.
Okay, well, consumption remains the overarching theme of this year because of higher MSP, and also most of the analysts in the street have been betting on the recovery in the rural market. And I was coming to that, Tirthankar, the safety premium that one has been paying so far this year for all these companies, which are also, quoting at higher valuations. Do you think that's still a safer bet, or it's time now, considering the correction that one has seen in the broader markets, to start identifying good stocks even in the broader market?
See, that identification of good stocks remains a theme at all points in time. There is no, of course, part of the carnage we've seen, especially in the mid-cap space, does offer significant opportunities. But I would say good stocks the identification of good stocks is a continuing theory. But in terms of a portfolio twist, one would remain overweight towards consumption themes, despite the valuation premium that we are paying. Yes, valuations are stretched, especially in the FMCG space, consumption in general, valuations are very stretched at this point. But the alternative is not something that I would bet on right now. Yes, for 1 or 2 quarters, you will have INR-based themes coming up, but India's primary objective or for the next couple of years is a consumption-based recovery. That's our strong point, and which would eventually lead to higher and higher capacity utilization. Not in many parts of the world, this is a story that's playing out. We have many places where bank asset quality is as bad as ours. We have many places where inflation is not really picking up. At least in India, we have an example where there is overheatedness in the consumption space, something that the central bank is now taking cognizance of. So this is a multi-year growth story, and many of the steps taken by the government, not really in the financial space, but in terms of governance, are likely to have much longer positive impact for us in the next couple of years. So we remain fairly sanguine on the India recovery story over a long-term period, but not something that's likely to play out in the near term.
Interesting. Tirthankar, my final question really, and that is on autos. They seem to have gone off the boil slightly. Now, I remember 9 months ago, or 12 months ago, everybody was talking about how the valuation gap between a normal consumption, consumer FMCG staple name, arguably because it's more easy to predict their growth versus autos per se, but the valuation differential is fairly high, and they form a part of this consumer pack. While the monthly numbers or the monthly run rate still seems to be strong, the stocks aren't quite there. What do you do here? There is chalk and cheese performance within the auto pack as well.
So, it's essentially segment based. So you are looking at fairly good numbers. You're looking at fairly good performance in the PV space until now. CVs did fairly well in FY18, but going forward, you're looking at a gradual slowdown in the economy because of higher crude prices. You are looking at stocks which have performed fairly well in the CV space. So there is likely to be some kind of a correction on that front, and we should be cognizant of that. From a theme-based perspective, PVs are likely to continue to outperform in the next 2 to 3 quarters. But like I said, you take a step back and you look at the macros. 2018 is not 2017. So the consumption story remains, but the drivers that were fueling the 2017 kind of story in terms of comfortable crude, comfortable cost of funds, those drivers are not really that powerful at this point. So one would see this kind of divergence coming up in the auto space as well.
Okay, Tirthankar, we'll leave it at that. Many thanks for joining us today and giving us that perspective. Really appreciate your time. Time now for a short break. On Indian Open, we will return. We'll find out if the strong growth momentum of Bajaj Finance will continue. Managing Director Rajeev Jain joins us on the other side.
anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Welcome back. You're with us on Indian Open. Bajaj Finance seems to be, well, facing a lot of competition now for quarters along on its lending business. More and more banks chasing individual borrowers through lucrative deals as well. How is it though that the juggernaut rolls on, and how is it that Bajaj Finance plans to stay ahead of competition, not just over the course of the next 3 quarters, arguably over the next 3, 4, 5 years? Let's get in the Managing Director Rajeev Jain to talk about all of this and more. Rajeev, so good having you. Thank you so much for taking the time out. This is Neerja. Good morning. You know, the most common refrain that I hear from most people who talk about the juggernaut of Bajaj Finance is that at some point of time, the AUM growth from the company will come down from the heady 40-odd levels to sub 35, sub 30, eventually settle at 25. This time around, while your optical number might be at 35, I think adjusted for the short cycle IPO financing base in Q1 FY18, you probably, the core AUM growth still at about 39-odd%. What's gone into this quarter? What does the outlook look like for the next 3 quarters?
So you know, overall, if you look at our press release, you would see that the growth is reasonably secular and granular. Our consumer B2B businesses, which are discretionary consumption-based businesses, grew 27%. Our consumer B2C business, which is cross-sell of other products to those clients, grew 47%. Rural, which is a only 5-year-old initiative versus the transformation journey of the company, which is 11-year-old, grew 75%. Albeit on and its growth rate last year was stronger than the current year, but the base is much larger. SME lending, after 4 or 5 quarters of mid-teens growth, actually made a comeback. Clearly, we slowed down post-demon, we slowed down post-GST. We're seeing revival of demand in SME lending. We do this business in close to 600 cities in India, and clearly, as you go into smaller and smaller cities in India, the demand is only larger. Commercial lending, which is, we do this for 9-10 years, but we are putting greater focus on it given what's happening in the overall banking system in terms of, as everybody is aware of, even investment grade clients are suffering from not getting incremental lines in time. That grew, adjusted for the IPO financing, grew 69%. Mortgage, which is a new initiative, while we've done that business for the last 9-10 years, it had reached a size and scale where we thought it was prudent for us to separate the management of the business and allow them to chart their own journey. That actually was the slowest growing in a way, and as I've told a few analysts yesterday as well, that it's a new management from BFL, but it's a new management. They are just putting their arms around. By 3rd or the 4th quarter, even they will start to grow. The overall opportunity landscape, I must just make a point to you, remains very, very large. If somebody is focused on building a long-term business on a sustainable basis with a 5, 7, 10-year view, should be able to seize the India opportunity in a very, very profitable and sustainable manner. That's really how I would respond to your question.
Okay, and I'll have some thoughts on this as well from a global landscape perspective as well, Rajeev. But so then the essence of my question is, you may not want to get into specific numbers, but would these calls of people believing that these heady rates are due to come off very, very soon, would this be too premature? It might be difficult to pinpoint when, but would you believe that high rates are not a thing which will come off very, very soon?
So look, we remain in the business of risk, not in the business of lending. If risk is not representing a risk to us, or our risk matrix and risk ratios are not representing a risk to us, the opportunity is very, very large. It's in this context I've always given quote unquote a guidance to to most people that I talk to that we are organized for a 27% balance sheet growth and a 22-23% net income growth. Now, versus that, even if you take the first quarter, the number is distinctly higher. It's because we are very conscious as management that we are in the business of risk. If you have to slow down because it's coming at the cost of risk, we will slow down. We're building business for long term, but on the other hand, if risk ratios continue to perform very well, risk matrix across our lines of business are holding well, we would grow as well. We are very well capitalized. We have invested very deep in building talent, technology and infrastructure. We are very deep from a geographic representation standpoint, now in close to 1,500 cities and towns in India. India's consumer debt to GDP remains very, very low by most emerging market standards. Forget developed nations. Why would one be not growing? So, but risk is really the central dimension. If it is good, you will see us growing. Last point I would make, and that reflects in our risk ratios, our gross NPA, net NPA on a year-on-year basis came down. We published this data now to the street over the last 6-7 years. As I was explaining on the investor call yesterday, that they look down by lines of businesses even where they were 2 years ago. So I'm not even talking year-on-year down. They're down 2 years ago, because our sophistication of the way we manage risk and the granularity has ensured that we are much better placed today than we were a year ago or even 2 years ago.
Fairly interesting. Yeah, I mean, I take on board the household debt to GDP point for India versus the other ASEAN nations as well. Would you believe, I mean, barring Indonesia, maybe all the other countries substantially higher than India, forget Korea, I mean, Korea is just at another level. But do you believe, Rajeev, therefore, that there could be a linear upside for the industry at large and for all well-performing companies, because those numbers, the household debt to GDP for India, by virtue of laws of economics, is on its way up. I mean, we see so many ads: loan pay phone, phone pay loan. All of these show the willingness of the young Indian consumer not being averse to taking products on loan in a big way.
That's partially true. On the other hand, I would just make a cautionary statement that it's a business of risk and not distribution.
Okay.
Okay. You have to still manage the risk and get your money back until the last outstanding is paid. You are not in money as a company. So, if I may make a provocative statement, that's why the entire fintech industry continues to struggle. Because it's not about distribution, it's about managing risk from there on and ensuring that outstandings are fully paid off.
Okay.
But otherwise, the opportunity is very, very large. I fully subscribe to that view.
Okay. So let me, just for my understanding, Rajeev, one small thought on what the next 2, 3, 5 years could throw up. You mentioned about how the asset quality numbers are near levels that you would want them to be. Let's assume over a 5-year period, the growth opportunity being what it is, at what levels of these asset quality numbers or the risk ratios that you would monitor, would you be comfortable growing at 35%, 38%, 40% AUM growth? Would they need to inch up substantially, or are these the levels that you would want to maintain even if it comes at the cost of growth?
So it's an important point. Look, one of the questions that people ask is, how come despite growing size, your risk ratios are going down? It's a valid question, right? I mean, let me demystify the conversation so that it becomes easier to... More and more, our existing customers do business with us. Out of the 28 million franchise that we have, lower is the risk. So today's risk ratios may look, or gross NPA, net NPA, line by line business, as you can refer to our investor presentation, are going down because our weight on doing business with existing customers of ours has been growing year on year over the last 4 or 5 years. Existing customer anywhere in the world represents half or less than half the risk versus a new customer. Now that comes to a cultural point. I must just make that refrain as well. doing business with your customer doing more and more business with you requires that he is happy doing business with you. If he's not happy doing business with you, he won't do business with you. So customer centricity plays an important role. Ease, convenience, multi-channel plays a big role. More and more customers do business with us. Despite growing size, you're going to see our risk ratios fall. And wallets of our consumers, because we deal with mass affluent customers, remain very, very large. We have to just keep use our technology, use our analytical infrastructure, use the culture of the firm to do more with existing customers and keep growing. That's because growth remains an important dimension while managing risk.
Okay, interesting. And yet, while you're talking about one more business from the same customer or even cross-selling, not just in the same vertical, but cross-selling being an important part too, you're adding customers at a fast clip. I believe yet another quarter of 1 million plus, 30% odd growth on a YOY basis. Does that customer acquisition clip also continue because the opportunity is so large?
Yeah, so we are in 1,486 cities and towns as of June 30th. The goal would be in the next 3 years' time to be in 2,200 odd cities and towns in India. It does represent a very large opportunity, but it will be a paced growth. Add 15-18% distribution every year. At least from a next 3-year horizon, we are clear. From there on, it would be difficult product. That does bring in a lot more newer customers, even in large markets. In Tier 1, our penetration is very deep. As we keep go from Tier 1 to Tier 2 to Tier 3 to Tier 4, the penetration rates drop. That represents a very large opportunity for granularity, for management of risk, and for growth of franchise.
Interesting. Okay. A couple of accounting questions as well, Rajeev, just to get a sense. The gap that came around this time around because of India GAAP versus Ind AS, and that was probably about 6 to 7%, maybe slightly higher. Would you believe that that will be the kind of gap that will be there for the rest of the quarters as well, 6 to 7 odd %?
Yeah, we've outlined that very. Okay, as our CFO said on the investor call yesterday, that most of that gap essentially comes in Q1 or in Q3. In fact, Q2 and Q4, just from a normalization of revenues and profit pool, will actually be more smoother. We used to be very seasonal. We used to have up Q1, a little marginally down Q2, up Q3, and marginally down Q4. We've explained yesterday that on a full year basis, it'll actually become a much more linear approach. We think it's a great thing to. Ind AS is the right thing to have happened. It's a big change, but a good change from a reporting and disclosure standpoint. First quarter, second quarter, I can say you will not. You will see actually. You will not see impact of 6%. It's the first time we made this change as well. While we've done disclosures to the team, we are also putting to the street. We're still also putting our arms around the entire modeling and remodeling by the finance function, because you must understand that until 31st of March, it was not clear whether the Ind AS is becoming applicable or not. Sure. And we have a very, very large franchise. It's a very complex change from that perspective for any company which has a very, very large franchise. So we'll have much greater clarity by end of Q2, that I can promise you. Q2 may not see an impact. Q3, Q4 will become much clearer.
Well, and we'll talk at the end of Q2 to get that clarity as well, that small clarity. Yes. Yes. Rajeev, you've outlined this in the past that you are not unduly bothered about the rising cost of funds, if indeed it were to happen. Your NIMs this quarter around expanded despite, I believe, the cost of funding inching up a little bit. Are we to presume that unless the rate cycle moves up dramatically sharply, there won't be a problem to your net interest margins because of cost of funding effectively?
There you may see some degree of compression by quarter 3, quarter 4, because it seems very clear to me that we are in for a rate hikes are going to be real. Inflation is kicking in both on account of crude and GST. In general, economy is micro is strong. That itself leads to is inflationary in nature. We are in for multiple rate hikes. Transmission is lagged, so you may see Q3 and Q4 coming under some degree of pressure on account of difference between increase versus transmission, but it will not be significant. I don't foresee interest rate shock. I mean, in 11 years we've not seen any, so I wouldn't worry about it.
Okay, and therefore no worries on the NIMs as well. Your SME book has grown a fast clip this quarter. You mentioned about that in the opening thoughts, opening comment. And while the asset quality out here has shown some stability as I look at the numbers, Rajeev, are you comfortable with this pace? I mean, given this collateral issues that at least some of your peers are showing post this demon and GST shocks, are you comfortable with this pace of growth?
I would wait to pass a judgment, probably one more quarter, and then we'll be much clearer.
Okay, let's leave it at that then. Just last couple of questions, Rajeev. One is this whole cross-selling and getting more business from the same customer. Is that the basis on which your housing finance business is expected to grow? I mean, a lot of fund managers who I speak to talk about some very innovative plans that you seemingly have in order to grow the housing finance book. Can you throw some color here?
I would just say, as I told investors as well as we had our AGM yesterday, that it's a business in incubation. We should just wait for the management, the CEO and the management to just outline their strategic view on one hand and their execution plan. But I do promise by fourth quarter, we'll very clearly share what our plan is going to be, not a strategy, what our plan is going to be, because it's a going concern business. It's 26,000 crores of the 94,000 crores of assets. Do give us time for the next 2 quarters, and then we'll share a clear plan.
Well, we have all the patience in the world, Rajeev, as investors have shown now. One last question, really, and this is something that came up in conversations with, well, actually more than one, actually 2 or 3 people, about what happens if there is a notional change of guard of sorts, wherein Rajeev Jain moves up in the hierarchy at Bajaj Finance. Would that result in a change in focus from what Rajeev Jain is doing currently at Bajaj Finance? I mean, that's something that is playing on the minds of investors, at least, Rajeev. What would you say to that?
I think I'm right here. I think we have a multi-year opportunity in making this company one of the largest financial service companies in India. I think our work of last 10 years is beginning to just reflect in the in results over the last 2-3 years. As myself and Sanjeev say, that we're doing the same thing that we were doing for the last 10 years. Just focused on execution, focused on customer, and as a result, cross-selling to him, deal only with mass affluent customers. Parallelly, we've created a very strong culture in the company, which is one of our biggest competitive advantages. And cultures are difficult to build, cultures are difficult to destroy. So one man is not running the company, 15,000 people are running the company, and culturally adjusted for the level. That is an important point, that the youngest officer or the junior most officer may not reflect exactly the same culture as I may, but you will get lots of traces of that cultural orientation, whether you talk to him or you talk to me. And that's the culture. Culture remains a very, very central dimension of the way we have built the company so far, and we think it's our big competitive advantage. And I'm not going anywhere, and that culture is not going anywhere. Rajeev, if at all anything, we are strengthening it.
Rajeev, you misunderstood my question. I was not talking about you moving away from Bajaj Finance. I was talking about you changing roles. So what if the role of Rajeev Jain changes from an MD to being a chairman? Does that change the focus of Rajeev?
Doesn't. Those are descriptions. We're excited about creating value. That's really what is most important.
Okay, great. So good chatting with you today, Rajeev Jain. Thank you so much for taking the time out and being with us, and congratulations and all the best for the quarters ahead.
Thank you very much. Thank you.
The stock is up another 2% in the session today. That's nudging new highs. The market too, by the way, has done reasonably well for itself. After starting off slightly skittish, we're about 1/3% higher for the Nifty, Sensex and the Nifty Bank. I would reckon the mid caps and the small caps to inching up a little bit. What's driving this up? Some pressure on the commodities, but Bajaj Finance is up 4%. Finance is up 3% now, 2591. So those two, the Bajaj twins heading the way. ICICI Bank has recovered some bit of ground. And Reliance at 1125, Infosys at 1346, up about 2.5%. Well, some heavyweights out there making their presence felt. Exciting day for the markets ahead of the no confidence motion proceedings starting. We're approaching this with full vigor. Time up on this leg of Indian Open. Up next is the FNO show. Do stay tuned to Bloomberg Quint Live.